This is really the opportunity of a lifetime. You will not out trade this thing when it starts going up. Things are going to accelerate very quickly. You kind of have to grow some, I won't say that, grow some courage when everyone is believing something. It's typically going to be wrong when it comes to finance. DeFiancy is now positioning itself for the big move. To me, this is the best opportunity in crypto. Everybody, this is Andrew from DeFiancy, and we just wanted to give everybody a brief little update on the macro environment with crypto, kind of where where our heads at, and why we're taking some of the positions we're taking right now in the markets. It's actually a really interesting time. We waited to do this video for today, mainly because we wanted to be prepared for FOMC, spend a lot of time managing our positions for that event that just ended. This is we're recording this on Wednesday, and there's a lot to learn, I think, from the last few weeks. But before we get into more of the nuance there, I kind of want to just go over this chart here a little bit. So right now we're zoomed out. We're looking at the Bitcoin chart, and a lot of people don't look at crypto in an exponential fashion. The way that we're actually looking at this chart right now is in a logarithmic scale. So most people look at charts, if they're not really into this stuff, with a linear chart. So if you're looking at Bitcoin from a linear chart, this is what it looks like. But really, that's not the way you should be looking at Bitcoin over time, because it's an exponential asset. And most of crypto actually has followed a similar pattern here. The reason why I want to show you this is I think it's good to start here to get kind of a perspective of what DeFiancy is really setting up for the next year or so. So if you look at this chart here, going all the way back to 2014, we had this massive bull run that really started this leg right here. This started somewhere in 2013, and it just absolutely launched, from roughly $80 all the way to over $1,000. So, enormous move there. That's like a 10x. And after that happened, we had this long consolidation. And of course, people that were into crypto at the time thought, oh, it's over. We're never going back up to these prices ever again. And it did this for about a year, roughly, or let's see, actually about 2 years, sorry. And it eventually consolidated. So if you look at this line down here, right here, it did this what's called a consolidation zone. I really want people to focus on this, because what you're going to see is what has happened here keeps repeating itself over time. So we had this massive expansion again. Okay, so notice the trend here. Expansion, decline, expansion, decline. This one was actually a little bit different, but you had decline, expansion, a little bit more decline, and then another expansion. Well, look where we are right now. Okay, if you look at this, you're where we've been in the past. So you've had this huge downtrend. Everybody thinks it's over. Crypto's dead, so to speak. Bitcoin's dead. And then you get this breakout. But notice how this has happened over and over and over again. But notice what happens when you break this macro downtrend. So these are monthly candles. Each candle here is a month. So this takes place over, more than a year. But when you break this macro downtrend, notice what happens every time. Things get pretty explosive. And what have we done recently? Well, we've broken the macro downtrend. And it's been confirmed at least over a few months. Now, this doesn't mean that it can't come back down and retest levels. But we're pretty sure that the majority of the selling that came from this enormous move that happened over 2020 and 2021 is over. And now the market is in what's called consolidation / accumulation, really, mode, where the market's going to want, or market participants, hedge funds, trading firms, people who buy Bitcoin to make money later, investors, they're going to be adding, the smart ones, the ones particularly with a lot of capital, they're going to be adding every time this market goes down. That's pretty clear. Anyone that does this full time, whether they end up being right or wrong, I can tell you believes that if they buy Bitcoin here at these prices, they're going to be rewarded in the future. And you can see when we zoom in now that this is why Bitcoin's being very stubborn to the downside. It just doesn't really want to go down. If you look at this move we've had recently, I mean, it's been it's absolutely ripped. And it's really thrown people for a loop because no one really expected it. And this is how bull markets really start, is no one really expects it. There's really no rhyme or reason most of the time. It just, whales got in, they bought down here, and now they'll push the market up basically in cost-effective ways. But we won't get into that. Some people will think that's a conspiracy theory, but it's true. This market is really manipulated by a few people right now. It's always been that way, but you can make the case that legacy markets aren't very much different. But it's pretty clear that this market is in accumulation. So what does that mean? Well, that means that every time this market gets back to any kind of significant level, you're going to see people that are going to buy. It's pretty clear to me that if this market gets to 25K, you're going to have massive amounts of attention or interest at that level. And this is the reason why it won't go there. Everyone's been waiting for it. When we had this big move up, everybody was like, oh, it's going to go back down. It's going to go to 25. Well, if everybody believes the market's going to go somewhere and they think that it's a good opportunity, it probably won't go there because this market is not very liquid. And what ends up happening is people have to front run the crowd to be able to get positions. If I want to go buy $500 million of Bitcoin, that's a lot different than if I want to buy $500,000. I can buy $500,000 right now in one trade. But I can't buy $500 million of Bitcoin in one trade. I have to be very strategic. And that's what this is really all about here. Now, before I get you too bullish, I want to talk about a little bit of the lower time frame. I think it's good to start with the high time frame so we know what, have the end in mind, so to speak. But the lower time frame, to me doesn't look all that great. So if you look down here, you had this accumulation. Anytime you see price, and it basically, sellers are getting less bang for their buck over time, and it starts to really just kind of turn around. That's a sign that markets are bottoming out. And this usually coincides with some kind of macro or change or something. But we're also seeing that on the lower time frame here, where every time the price tries to go up, there are sellers who are stepping in. We're not going to go too much into this because for most people that are with DeFiancy, this is not going to matter 3 months from now. But over the next couple months, this will matter. This is really, really terrible trading conditions for any trading firm, really, unless you're a market maker. The reason I say that, if you look at this, every time Bitcoin tries to do something, it's very indecisive. So there's really not any winners here. It's staying kind of confined, consolidated, compressed into this little zone. What that's saying is you do have interest when this market goes down, and you have interest for sellers when it goes up. And at some point, this is going to break out very violently to one side. Just because of all the compression, a lot of futures contracts are involved in this. Someone is going to lose, and they're going to have to close their trades. Now, we're not going to really try to speculate on, where that direction is. I'm leaning right now that this is probably going to go down first. We hope it does, to be honest. And the reason why we think it's going to go down first is because the government is selling Bitcoin, and they've made it public. You can make the case that it's priced in and people are expecting it, so it may not be that dramatic. But they're going to sell like $1.5 billion. It's over $1 billion. I think it's about 1.5. That may not sound like a lot, but when you put that on an order book and you're trying to do that in a relatively short period of time, it's pretty devastating for price action. And we know that the market does not like the idea of this because this candle right here, see this bigger candle right here? That was from a rumor that the U.S. government was moving that Bitcoin they want to sell to an exchange. It actually wasn't true. But whenever people thought that, there were some trading firms that just completely decided they wanted to get out of their positions. Market makers stepped out of the way and price went pretty violent to the downside. That's a pretty good indication that once they actually do start selling, a lot of the trading firms are going to allow it to happen. They're not going to bid it up, and the price will probably sink pretty low or compared to when they start selling. Now, this is all short-term stuff. You also have Mt. Gox. That's a different situation, but it's sort of related. We have a huge seller that we know is going to be coming on the horizon. So I'm mentioning this to say this is why Bitcoin's having a problem here, because a lot of people don't know that a big factor in how liquidity moves in crypto is mining. So Bitcoin miners, they uphold the network. They ensure the security of the network, right, the infrastructure, and they're rewarded in Bitcoin. Well, it actually costs money to run these mining operations, an enormous amount of electricity for these operations, and they got to pay for that electricity. So if they think, from a business standpoint, okay, like, the price might be lower here pretty soon. Well, I might need to go ahead and sell some of our profits. And I had a chart, and I can't find a good one right now. I'll probably show you guys in another video that's showing that miners are selling right now. So this is heavy selling from miners. They started selling actually lower. They started selling around here, from what I could tell. But there was some interest after, when the banking crisis happened. The first bit of that banking crisis, what we'll talk a little bit about later, probably in another video. But that created a narrative, and a lot of shorts got blown out, and now we're here. But we're at the most significant level of resistance that is on this chart. There is not a greater level of resistance anywhere on this chart. You can make the case that up here, because you have this double top, is greater, but I would actually make the case that this is actually a greater level of resistance. You spent so much time here. I mean, if you actually go all the way back here, this is like 856 days roughly. That's a really long time. And the longer price stays at a certain point over time, the greater level of resistance of support that is. So while this is resistance right now, the reason why this is such a significant level, and honestly, this is really the opportunity of a lifetime, in my opinion. Once you break over this level, things are going to accelerate very quickly, in my opinion, to the upside. Because once you flip it, it's like a double-edged sword kind of thing. It will flip the other way, and it's very strong support. So once you break through very strong resistance, it becomes very strong support psychologically. So if we do break this level, you can rest assured that it's probably not going to break it very easily unless something very significant happens narrative-wise. Now, I don't actually think this breaks this right now. It may deviate above it and trap some people and then come back down. I'm expecting for us to come somewhere around 25, 26, maybe even to 23. This is really what we're expecting. And the reason why is what I said earlier with the government. We know that they're going to be selling throughout the year, and Mt. Gox, sell pressure. It's going to be difficult, I think, for a lot of trading firms to want to buy a lot right here. But on the flip side, if you were very long-term minded, or really even not that long-term minded, just thinking 2024 or even really end of 2023, you don't care maybe if you buy here. I think a lot of people think we're going to be significantly higher. We do, probably by the year's end. So this is kind of like the overview of the price action right now. One thing I want to actually point out here, this is not really that important for most people, but it is kind of interesting. You probably won't understand at all what this is right here, but I've been noticing something since we were at 18K near the bottom. There's been I think it's only one trading firm, and these are massive billion-dollar trading firms. We don't know which one it is that has really been pushing this market up. So we are a little bit cautious right now because of that. It's not really all that simple, but it's one thing I want to point out that I don't like to see that there's manipulation, and that's the reason why price is staying up, because this is certainly happening to a certain degree right now. So we actually are somewhat cautious here, but that's something that I don't think people will really benefit from if we go too much into, but we are aware of it if anybody mentions it. This is basically what we just talked about. This is a pretty good view here of what I just showed you. Every time Bitcoin goes through its consolidation phase and breaks out, it typically has a massive bull run. And don't get me wrong, I do understand that there were different monetary policy during this phase right here, and that's why we had these massive moves up. So, we understand that things are different right now. We're not in the same extremely loose monetary policy. But I'm going to go into why we believe we will be back into that phase here in a second. Actually, right now, let's go into that now. A lot of the bears who disagree with me in terms of, DeFiancy's strategy, which is that we're on the cusp of a major breakout that's going to really be once in a lifetime again. This happened a few times already, but most people didn't know about crypto in 2017 or even 2020. The market is giving everyone another chance to buy at what I believe is low prices for Bitcoin. I'm not actually my opinion on Bitcoin is not at all my opinion on crypto in general. I think most cryptocurrencies are going to zero, like 99.9% of them. Um, but there are a few cryptocurrencies, and I hate the word cryptocurrencies. I think crypto is a better word because they're not really currencies. Some of them are. Bitcoin's a currency, I would say, and ETH and some stable coins. But crypto in general, is not probably going to see some of these massive moves that I'm talking about. But the reason why people don't believe that these massive moves are going to happen, a lot of the people who don't agree with me, is because they think that the era of loose monetary policy is over. And it surprises me that they believe that, because I think anyone, and again, to each their own on their own opinion. But if you look at monetary policy over the last 10 years, this was really, the Fed was kicking the can down the road in 2008, right? So they printed a bunch of money. They actually, they did solve the banking crisis. And we're not going to, I'm not saying I'm an expert on the banking crisis or anything. I just think this is common sense that anytime the Fed has issues with, macroeconomic variables going wrong, breaking, for instance, banking crisis or commercial real estate or anything, their only solution is to print money. That's really their only superpower. They don't really have any other way to deal with problems. And the reality is any administration, any political organization that is influential at the time is going to be supportive of kicking the can down the road. And not to mention that, and I'm not blaming boomers at all, but a lot of people don't want to retire significantly poorer than where they are now. So what I'm saying is there's a great incentive to keep this can kicked down the road, and I don't think that's going to change anytime soon. Not to mention that it's actually what I would consider impossible at this point to not print money unless you want to induce a significant civilization like collapse. I would say what happened if they decided that they actually weren't going to continue to kick the can down the road. I don't think that's a dramatic statement, considering just facts like this. If you look at the total debt as a percentage of gross domestic product, just look how insane this actually is. So back in the 70s when we were raising rates, a lot of people want to compare this to the 70s and say, you know what, we're going back to the 70s, Paul Volcker style, where we're just going to raise these rates and hold them for a long time. It's not possible. And the reason why is because really, it's not very likely, let's just say that. I would actually say it's not possible without significantly breaking things. But in 1970, you had a total public debt as a percentage of gross domestic product of roughly like 40. It went all the way down to like 30. But these were pretty low levels compared to now, which we're at 120%. So we spend more money than we make as a country. You cannot run like that without creating more debt. It's math. It's thermodynamics. Like at some point, you either going to break your system down and have, again, like, I don't think this is a dramatic statement, like civilization like collapse around the world. It may not happen in the U.S. It may be lighter, civil unrest probably, but not near as bad as it would be in other places. But you will basically break the world order as it is if the Fed decided that they weren't going to step in when things break, is my opinion. I think that's quite obvious if you look at history when things really start to get bad. They know this, I think. I think the Fed realizes this, and people in power are maybe not as naive as we think they are. And I'm mentioning all this to say, if there's problems down the road, which there are very likely to be problems, we're already seeing the banking system having significant issues. There's really no one that I know that's really good at the macro that believes that the Fed is going to be able to hold rates like they say they are. Because they're saying we're not going to cut rates until 2024. The bond market doesn't believe them. The bond market hasn't believed the Fed really at all. Since they didn't believe them in 2022, really. At times, they started to get on board, and then they would get off board because they don't believe that the Fed can do what they're saying. And it's kind of obvious that the bond traders are a little bit smarter than the YouTubers who are saying that, basically that the rates are going to stay up and things are going to get really bad and they're just going to allow the economy to collapse. It's just not going to happen. So how do we tie this all together for why this matters to crypto and why it matters for DeFiancy strategy? It's because the solution to these problems that we're going to have inevitably is to print money. And why does that matter? Well, a lot of people look at the price of Bitcoin And they're like, wow, you had these exponential gains in 2020, not realizing that, well, yeah, because you're comparing it to the dollar. If you compared it to other assets like real estate, the gains were actually still pretty good, very, very good. But they weren't the same. They weren't actually near as good as versus the dollar. And the reality is because we printed a bunch of money, and as the value of the dollar goes down, Bitcoin is naturally going to go up. There's only 21 million Bitcoin. And this is for really a lot, all assets really. And this is important because the wealthy are going to invest in assets that are going to act as a hedge against inflation. And people have actually used stocks to do that, and they've done pretty well over the last 10 years. You can't keep your money in cash when the Fed's going to print money for every problem that arises. So really what I'm trying to drill home here is it's just time at this point. We are going to print more money in the future. Doesn't matter if it's a Republican office or a Democrat, they will be extremely unpopular if they don't do this. Are we going to have 20% unemployment where you have civil unrest in the streets? Or are we going to live with 4% to 6% inflation? I think that people are going to come to conclusions that, and I'm not saying that inflation is good, but 6% inflation is a lot different than 25% unemployment. Or let's say it's even just 15 or 10. It's people will learn to live with inflation. You don't see that many people complaining now. I mean, yes, it's not good, and people are complaining, but there aren't people with pitchforks in the streets right now. Okay, when you get to 20% inflation, I reckon that will probably be a reality. But people will learn to live with inflation like they learned to live locked up in their houses during COVID. And I hate to use that example, but people will they will adapt, and they will get used to it. So what I'm saying is the Fed's going to they would rather have inflation than break everything. And once you understand that is significantly likely, then you start to understand this chart. And everybody said this was going to be impossible. So if you look at this is the stock market. This is the S&P 500. And I like to use this as an example. Everyone's saying that the market's going to crash, it's over, blah, 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 blah. But while they were saying this, while everyone was on the same side saying it was over, what was actually happening? Well, the opposite was happening. Or at least, let's just say this. The big guys were buying the whole time. Every time it tried to make a new low, they bought. This is accumulation. And I'm not saying that this doesn't go lower. I mean, it maybe even makes a new low. I don't know. But the public perception, the general public perception, when everyone is believing something, is typically going to be wrong when it comes to finance. And we can go into that later. It really has to do with derivatives contracts and reflexive price action, positive feedback loops, and human behavior. But the contrarians are likely going to win on this. And I don't want to put a time frame on this, guys. I really don't. But DeFiancy has totally changed our strategies from where we were. So we're going to wrap this up here. And we want to make more videos really about this concept that we're really trying to drill home with people is we are no longer here. So we had completely different dynamic. I think we started DeFiancy somewhere around here in this area. I actually think it was up here. What you're looking at here, this price action was completely different. The dynamics of the market was completely different. And what we did was we knew that we were in trouble. We told people way up here. We didn't actually have the proprietary trading firm going at this point. We were in the process of getting it started, but we were telling everybody it was over way up here. It was pretty obvious, to be honest. But it wasn't obvious to me that we were going to go all the way down here when we got here. So what we did was we were saying, look, you're already 50% corrected right here. We're just going to scalp trade. And that's what we did. We hit very small trades. It was very difficult. It's very time consuming, but we made small gains. But it's risky actually to do this stuff still. It's less risky because you're not in terms of open positions, but it's still risky, right? But it's just less risky. Let's just say that. The reason why I'm mentioning this is we are no longer in this phase. We've had the macro breakout. So what is likely to happen is this is just going to consolidate, and you're really going to risk missing the huge gains that you've seen in the past. So let's go here again. You will risk missing this because you tried to make little trades here, not realizing that all you had to do was just accumulate a position as best as you can in terms of averaging it out. Don't worry about the losses in the short term. You kind of have to grow some, I won't say that, grow some courage and just get in and wait. The people who have done that in the past, had massive returns. You will not out trade this thing when it starts going up. You won't. I mean, it's going to just, if we get into a rally like this, which I'm saying it's not guaranteed, we just believe it's a very high probability because of the Fed's going to print money again. You have banking systems collapsing. Blockchain is ultimately a decentralized alternative to many of the institutions that are actually breaking, at least the foundation in which they're built on. There's a lot of narrative. Okay, Bitcoin halving's coming in 2024. We know that. DeFiancy is now positioning itself for the big move, which means returns will be volatile. They're not going to be as clear cut because they're dynamic. They're open positions moving. Like for example, for the month of May, is really nothing. There's really no gains or losses. I mean, we probably have. I'm sure we're probably net one or the other, but we're really not really focused on making money when it goes down. We're really just trying to have an insurance policy to at least stay break even. We'll try to make money on the way down, but you have to be careful not to overhedge yourself and lose money when it goes back up, because that was the whole point of trying to make money on the way up. You can be it's really dangerous, in my opinion, to overhedge yourself, try to make money on the way down to a point where you miss money on the way up, if that makes any sense. So what we're trying to say is we're trying to basically accumulate a position, and this is just chop right here. It's meaningless. You can trade it. There's little trades we're going to be making. We're going to do our best to still have some kind of returns, and we have other strategies that we're implementing. But the whole point is to catch it when it breaks out. Okay, I think I've spent enough time kind of mentioning, I think, our strategy. There's one thing I want to show you guys, because I think this is really drills at home here. Let me see if I can find the Solana chart. To me, this is the best opportunity in crypto. I don't think there is another asset like this. And I'm looking at this on the log scale, but if you look at this on a linear scale, it really shows you what you're dealing with here. You're over 1,000% away from all-time high. This is actually a real blockchain people actually use. It's a real blockchain. It's the only real alternative to Ethereum. We'll get more into this later. Again, this video is getting kind of long here, but I just want to introduce this because we think that this is going to be one of the best performers of the next couple of years, and this is one of the big positions we're trying to accumulate.